Hello and welcome to the 1895 podcast with me, Thomas D.
And me, Rob Cockerill.
Rob, we're back in the studio. We've had a week off to pick over our thoughts and pick over that last episode, talking about, where hydrogen is going right. Really interesting episode, I thought, listening back to it.
Absolutely, and good to have that pause, I think, and let that settle, because obviously we've spoken a lot about where hydrogen's not quite going right over the past couple of years. So it was good to leave it on that note of where things are improving.
Yeah, and like I said, at the end of that episode, we are going to have to revisit that theme of a part 2 later on in the year, because there is so much going right with hydrogen, isn't there?
There is, absolutely. But this week, let's stay on the topic. Not quite what's going right,
but quite a contrast, isn't it?
Yeah, very topical story that we're going to get into here.
Yeah, and that is, of course, the story. If those have seen it on the HTV website or in any of the other news publications, that is that House Republicans in the US are moving to, or trying to eliminate, the Section 45V tax credit, which was introduced as part of the Inflation Reduction Act by Biden in 2022, I believe.
The very lauded, applauded Inflation Reduction Act. The whole world was envious of that.
Yeah, it was such a huge and strong signal for the hydrogen industry and possibly what got it moving and into the stage it is now, but that is now all in jeopardy.
Yeah, I mean, it really incentivized clean hydrogen production in the US. There's all the terminologies and the clauses and everything, but essentially 45V offered up to $3 per kg for clean, mostly green hydrogen produced, calculated via the GREET model. So it was very important, or still is.
Certainly is. And I tackled this very topic with a very esteemed interviewee earlier this week, and that was Mona Dajani, partner and global co-chair of energy infrastructure and hydrogen, and also co-chair of the energy sector at Baker Botts. And it was a great discussion that we had. Yeah,
having had a bit of a sneak peek listen to this, I think that was a fantastic interview that you had, Tom. A good conversation, and Mona with 25 plus years of experience in energy and energy transactions and working on major global hydrogen deals. I mean, that's a great person to have given us this reference point on this topic.
I mean, yeah, she says in the interview some of the projects that she's worked on, including the NEOM project. So great experience and great to pick her brains on this. So with that, let's pass over to Mona. Well, thank you for joining me today, Mona. Now, over the last couple of days, we've seen the news that House Republicans are seeking to axe 45V, which is the clean hydrogen production tax credit, and more recently that a House committee has now approved that bill. So I guess that's some background to why we are discussing this today and with you. And with that, perhaps you could just give us a brief introduction of yourself and your background in the industry.
Sure. My name is Mona Dajani, and I'm the global co-head of energy infrastructure and hydrogen for the international law firm Baker Botts. Baker Botts has been around for over 180 years. We are a full service law firm, and we're known and we specialize in energy. That's part of the reason I came. Educationally, I started with a chemical engineering degree and then have a MBA and JD. And I've been practicing law in this space, in particular transactions, energy transactions, for over 25 years. I have led or worked on all the biggest named high-profile hydrogen deals in the world. I was lead counsel for High Velocity, which is one of the hubs in Texas that was sponsored by the DOE. Worked on NEOM in Saudi Arabia. There's a lot. I could go on and on. But I'm thrilled to be here. Thank you very much for asking me to speak, and looking forward to an interesting conversation.
No, thank you, Mona. The pleasure really is all ours. So that's a background on you. That's a background on this story. But let's rewind a little bit more and give our listeners an idea of why this is such a big story for the industry, the hydrogen space. So I guess in a nutshell, what does the 45V tax credit do?
The 45V tax credit proposed some credits for companies that were producing green hydrogen, they call it. So what happened was this was, of course, part of the Inflation Reduction Act that was brought by the president, our former President Biden. It offers a production tax credit for clean hydrogen, aiming to reduce the life cycle of greenhouse gas emissions. It's calculated using a GREET, G-R-E-E-T model for emission rates, and it encourages cleaner production methods. So that's what and as a result of this Section 45V, there were a number of new projects that were announced in the United States. The Department of Energy also got on the bandwagon, and they had they selected 7 different hydrogen hubs that were going to be recipients of $2 billion each. And I had the opportunity to lead the largest, and I think the only one that maybe is one other one that survived so far, the High Velocity Hub in Texas. So these credits were very important for jumpstarting hydrogen in the United States.
Great, thank you for that, and thank you for that background and those details there. So, to bring us up to speed today, what has been playing out over the last few days that has put all of this into jeopardy, I suppose?
That's right. We had a reconciliation bill that happened, unfortunately, on that was released here late Monday afternoon. This was the House Republican budget reconciliation bill, which includes significant changes to the Inflation Reduction Act, specifically for clean hydrogen and carbon capture and sequestration. Essentially, this budget reconciliation, and it's not final yet, it eliminates the 45V, Section 45V credit for hydrogen production after this year, so 2025, while amending 45Q to restrict flow credits to certain foreign entities and repeal their transferability. So, essentially what they proposed was to terminate this 45V credit, which currently offers up to $3 per kilogram of clean hydrogen produced, and spurred significant investment in the clean hydrogen industry.
So I guess my follow-up question to that, if this does get through the House, what could this mean for the hydrogen industry?
Well, it's definitely going to be more difficult to have hydrogen projects in the United States without any significant outside help. So it will definitely have a chilling effect on hydrogen, and I believe that, and I could tell you because I've worked with so many of them. Those that are well capitalized, and have other, well capitalized are international, so they're not just in the United States. They'll be okay because most of their work is international, not just focused on the U.S. But for those projects that hadn't gotten started yet, that were in the United States, that it's going to be very difficult to get any extra money. So it will definitely, it will definitely terminate. It would when those that it would terminate this 45V tax credit. My understanding is that U.S. House has approved the bill that could terminate it. I will tell you that there's a lot of attempts still by Democrats to still rewrite the package. But it still needs to, head to the House floor. And for those projects that entered construction after December of 2025, it's going to be, there's no way that they're not going to be able to get that credit anymore. So this would definitely put a chill.
Sure, thank you for that. And you've picked up on a lot of points there, which I want to get into some more detail through the course of this conversation. But first off, you've told us about a lot of the projects that you've been involved in there in the US. So how significant is the proposed 45V rollback going to be from a legal and a contractual standpoint for hydrogen projects in the US? Because our team here at GasWorld H2 Intelligence estimate that between Q2 of 2022 and Q4 of 2024, planned blue and green hydrogen production capacity increased 247%, from 5.34 million tons per year to 18.53. So what will it mean for those projects?
Well, let me just say this. First of all, now that the House Ways and Means has voted in favor, the bill will advance to the full House of Representatives, and they would also need to vote in favor. The Republicans currently hold a narrow majority, and so it makes it possible that it could pass, but it's not 100%. And and I will also, another important data point is that 8 of the 14 awarded funding under the clean hydrogen, regional hydrogen hubs that I was discussing earlier with the Department of Energy, those are in Republican-led states. So while it is not up for debate right now whether, whether if this Section 45V will go forward or not, and what's going to happen to those projects. It's really going to depend on if the Republicans here have enough votes to block the bill. And and one of the things that was discussed at length was, if this does happen, should this first, what needs to happen is this has to pass the House, then it has to go to the Senate. That needs to pass by a majority. And, any kind of pushback or opposition could, complicate it. So it's not 100% that it's going to be terminated. And there's also a chance that a different type, the bill could have some more changes to it before it's finalized. So there's a lot of trade groups that are in hydrogen and in clean energy in particular that are really lobbying very, very hard to try to stop or at least hear them out on some of the critical components of what they wanted to take away if this happens. So, and it's also possible that this will not pass, and it will, it won't pass, and therefore nothing will change, and the credits will remain as they are right now. This would probably be a win. That would be, a win for the hydrogen space. But it doesn't mean that there's, that nothing's going to stop that from coming back again. So, yes, I think, that's essentially why I think we're still in the wait and see zone right now to see what's going to happen.
Sure. And like you say, there are two outcomes to this: it's passage or it's failure. But
Right.
this goes further than the US, I suppose. So either way, whichever
Yeah.
way this vote goes,
Yes.
does it send a message to the global hydrogen investment community about policy stability in the US? It's not on the firmest footing as it is already, is it?
Right. Absolutely correct. I mean, this is definitely signaling that the U.S. has, if this passes, not in favor, but of hydrogen. But I will tell you that um, there's there's still political will all around the world for hydrogen, including in the United States too. There's a number of hydrogen projects that have already started that are going to continue. I think those projects that haven't started yet, and this does pass, I think they're in a pause position right now. It will be very difficult. But I think it sends a message, but I don't think that that around the world they're going to stop just because the United States voted to or may vote to terminate this. I think that there's still some green hydrogen projects that are operational, and even some that are claiming the tax credit. So we'll see. What I think we'll see is a lot more hydrogen, obviously, projects be in those countries that have that political will to still adopt hydrogen. Whether so in Europe, in Asia, the Middle East, they're very strong. So I don't think. I mean, there's a lot of things that this administration, the current administration, has done that or passed that the rest of the world disagrees with. But I also will tell you that I have a lot of clients that are utilities, and also they are energy companies that supply the utilities, like, gas turbines and such. And they've changed a lot of their product to accept hydrogen. And so I feel like there's still that political, and there's a political and still the economic will too, as well, for hydrogen.
Yeah, it's certainly an industry that we want to see thriving here at Gasworld. Picking up on something you said just at the top of the answer and at the top of this conversation, if
Yeah.
this bill does pass, then only projects that begin construction before 2026, I believe it is, will be able to access the credit, and that's just 18 months from now.
Yeah. Right.
So, are there enough projects that are in a position to do that and to make use of that tax credit?
I think that those projects that are well underway, yes. But those that that are not, no, I don't think. I think it definitely it's they're not going to be able to claim it, and it will and I think that those projects and a number of the projects I've worked on and companies in the space have just pressed the pause button until they saw what would happen with this, whether the IRA as a whole, and then how it was going to look like.
Absolutely. And sticking on the theme of financing and given a clear link between 45V and Hydrogen Hub bankability, what would you advise that project developers do now to mitigate any federal policy risk?
Well, it's difficult, right now. It depends where the project is in terms of timing, where it is. And what the deal documents, the contracts say with respect to change of law and whether this was addressed or not. So it's difficult to assess without understanding the framework that they signed up for. Hopefully, if they used me and others, good counsel, there will be ways for developers to either, terminate the project or to seek other forms of financing to have their project go forward. And hopefully their contracts are structured in a way that they will have minimum liability, whether they terminate or they convert it to another type of project not using hydrogen, or maybe like a small piece. I've actually had a project that's going forward that's a data center that they're going to be using hydrogen, and it made sense for them because they could, among other renewable energy technologies too as well, because they're not really using, they're not relying exclusively on tax credits.
Okay, and moving on to another tax credit, which we cover a lot here at Gasworld, that's 45Q. For those unaware that are listening to this, this is the incentive tax credit for sequestration and utilization of CO2. So is this mentioned in the proposed bill anywhere?
Yeah, there were some proposed changes to 45Q, which is carbon capture and sequestration, which restrict the ability of credits to flow to a specified foreign entity. And there's a repeal of the transferability of credits. So this means that for 45Q credit, which provides incentives for carbon capture projects, it would be less attractive to those looking to sell or transfer those credits to other entities. The proposal, however, still maintains Section 45Q until 2032, which indicates that the underlying credit structure will still stay the same. So, so while the IRA tax credits are, uncertain, at this point, at least for 45Q, it's not as bad as 45V, where they're attempting to terminate it outright. And also keep in mind that while the future of these tax credits, all the tax credits under the IRA, like I said, we have to go through that approval process, which I discussed with the House and the Senate, it still can be revised and changed.
Okay, so off the back of that, do you think that we'll now start to see a pivot towards perhaps blue hydrogen and less of a focus on green among both your clients and the broader market?
Yeah, absolutely. Spot on, Tom. Yes, absolutely. A lot of the projects that I was working on already were primarily blue. There was some green, but they were relying, most of the green projects in the United States were relying almost exclusively on, incentives and credits and such. Whereas the blue hydrogen, and I'll tell you that I'm representing some very large energy majors that are working on a lot of different blue hydrogen projects, have not stopped and going forward because they're not relying on the credits or any kind of incentives. And they've made some joint ventures and partnered up to make sense so that this all makes sense, and to mitigate some of the risk, and to lower their investment as well, like what they're going to be investing in. So yeah.
Okay, and continuing on 45Q, not only yourselves, but I guess the wider legal community, how are you navigating the tension between environmental scrutiny of 45Q and the commercial push to use it as a fallback for 45V?
That's a good question. I think, ultimately, from my perspective, I'm representing a client and I basically negotiate and scribe and draft documents based on what they want. So if the government has made it much more easier to skirt around some of the environmental regulations that that the previous administration emphasized, that's, if it's, as long as it's legal, they can and they could do it. And I think the question that they need to ask themselves is, when this administration is over, there may not be the same feeling about environmental concerns. We could have some environmental catastrophes that will affect that, even though it's legal, like it's not good from a corporate policy perspective. I'll say as an example, there's a lot of companies that are now relaxing their policies on DEI and ESG because there were some major, Wall Street leaders in the U.S. that were publicly saying, and then were supported by the current administration, that it's not a value that they're going to support. And but I have a lot of other clients that, despite the current chill on ESG and DEI and others, from their own internal cultural policy perspective, irrespective of the economics of a deal, like it does affect what they want, and whether they're going to make changes or not.
Okay, sure. And to touch on the market and to circle back to, I guess, the top of this conversation, some things that we've already discussed. You've worked on many projects, not only in the US, but around the world, in the Middle East, in Europe. So how is the US hydrogen market now perceived, relative to the European and the Middle Eastern markets, where we're seeing much more support behind hydrogen and where policy signals appear to be more consistent too?
Yeah, look, I think right now we're in a very unusual time where there's a lot of, we call it whiplash here in the United States, with respect to, executive orders, out of the blue executive orders, how the global economics with our interest rates are doing here in the United States, and a number of, whether it's clean energy or something else, there's definitely more of a push now to favor more of the traditional energy sources, fossil fuel and coal. But I think that the rest of the world, I mean, we're all kind of in a chaotic situation, chaotic time. Not just in the United States. I think it's everywhere. There's so much going on. There's, like 3 ongoing wars, and there's physical wars, there's tariffs, trade tariff, and then there's also more uncertainty with respect to the interest rates. And I think all of these global macro factors affect deal making. And but like I said at the beginning, I believe that there is still political will. There's differences of opinion for what the perception is with the United States in connection with hydrogen. And there's but it doesn't mean that that hydrogen is dead. No.
Okay, great. And that's great to hear from our point of view. And a final question. and a look towards the future. I know you don't have a crystal ball, Mona, but
Yes.
as we've touched on, there's going to be two outcomes to this. It either passes or it doesn't. But either way, it's probably not going to be the last we hear of this, or the last legal threat to the hydrogen sector. So what could happen next, and also where do we go from here?
I really think that there's a lot of this is still very unknown. There's still a lot of uncertainty on how the bill will whether it will pass and how it will pass, and whether it's going to pass in its current form or change. We don't know. There's, like I said earlier, the word whiplash comes to mind. And I believe that there will be, if there are a number of companies that are very committed to clean energy, I hope that they're voting. I hope that they're talking here in the United States to their senators and their representatives, and to try to get the word out. But look, I mean, as a whole, I would say I've been doing this for over 20 years. I've seen a lot of cycles. If this passes in whatever form, but there's still these restrictions that we're seeing now in the draft form, and they don't get changed, I think that there will still be projects going forward, but there's going to be much more scrutiny on the economics and whether it makes sense for that deal to go forward. But clean energy has been a resilient industry for many years. This is not the first time that we've had this. We didn't have the IRA up until the previous administration. And there's still many, just, big picture. At the end of the day, there's a lot of people, smart people, that are very committed to having this industry survive and save our planet, because that's what it's doing.
Absolutely, yeah, and that's what it's all about. No doubt a story we'll be keeping an eye on over the coming days, and keeping you in work, I'm sure. But Mona Dajani, thank you very much for your time, and thank you for joining me today on the podcast.
Thank you very much, Tom. It was great to be here, and I'm delighted to talk to your audience.
There we have it, mine and Mona's conversation from earlier this week. Great to pick over, 45V and everything that's going through the House Ways and Means Committee, and what could go to a full vote in, a few weeks' time.
Yeah, absolutely. I mean, a lot of great talking points in there, Tom. Well done on that interview. The proposed elimination of 45V would be after 2025. So what we heard there is projects under construction before 26 could still access 45V, but others will just be paused or cancelled. I mean, it could be a devastating hammer blow to the industry.
Yeah, and I like the fact that she was, pragmatic with her approach to this, and emphasises the fact that the legal uncertainty is high, but it doesn't mean that hydrogen is dead, especially globally. There's policy stability in regions like Europe, Middle East, Asia, and she does admit that it will send a message to the rest of the world, but hydrogen is going to continue, and there is still political and economic will for this to happen.
Yeah, absolutely. And I mean those words, but the rest of the world will continue. Yeah, of course it will. Yeah. And I said earlier, didn't I, that the rest of the world was envious of the Inflation Reduction Act, but actually now, a few years on, we'll be thinking, okay, maybe things are a bit more certain and solidified in our policy climate, and we can keep moving forward. Interesting point around the shift from green to blue as well.
Yes, I think that was always going to come up, and it was a point that she firmly agrees with. Given the fact that 45Q has mostly escaped Trump's axe, I guess. So that is going to continue. That's going to stay in place, and she admits that many of the clients are energy majors in the blue hydrogen space, and these projects are still going to go forward.
Yeah, absolutely. I think the thing that probably concerns me the most is the bigger picture here. I think this ties together all the things we said that were going wrong in hydrogen and some of the pockets of things that were going right in the last episode. But it's that final takeaway that it's still a wait and see situation. It's a wait and see situation with this policy shift up and potentially removing 45V, but it's wait and see in hydrogen as a whole. It's like everyone's kind of stepped back from the brink a little bit and waiting for the next person to take that investment, to take that FID and move forward before everyone else does. And that's not a great situation.
No, I mean, if we rewind to the podcast we recorded a few weeks ago on sort of where hydrogen went wrong, if we look back at our finance webinar, if we look back at our large scale projects webinar, it all comes down to we are at a bit of a standstill and we are waiting for at least someone to make a move, and any policy instability like this just doesn't help.
Yeah, and Mona's words, we're in a period of policy whiplash. I mean, fantastic way of describing it. And yeah, that's just a big concern, I think.
And we should finish this off by saying, look, this vote or this proposed bill hasn't gone into law yet. It still needs to get through the House. It still needs to get through the Senate. There could be multiple changes to this bill. And this is something that could bubble on for months, could go on to the end of the year, I guess.
Yeah, keep voting, keep fighting, I think as long as the business case is there, keep pushing for it.
Well, Rob, another great episode there to pick over that interview. We'll be back next week and we'll go over some of the financial results from the first quarter of the year.
Yes, very interesting quarter, should I say, for industrial gas markets. Lots to reflect upon, and of course all of those big talking points around Air Products, some of the Cefi Gasemi legacy positions that they're in the write-downs, and then of course how they're moving forward.
Yeah, so if listeners want to get ahead on that episode, I guess they can go to gasworld.com or h2-view.com to check our written articles on that, and then we're gonna dissect that in a week's time.
We'll bring it all together, yeah.
Looking forward to it. But in the meantime, do please like, follow and share the 1895 podcast.